What is going on, guys? We have multiple stocks to talk about today. One of these stocks is at a yearly low. They are actually forecasting over 30 million in total revenue for 2022, almost doubling their revenue in 2021. And this one is at a yearly low. Just had a very big insider purchase of 115,000 shares, and they also have a share buyback program canceling 115,000 shares. So with their stock buyback program, they will actually be reducing the outstanding shares by 1 million shares. So guys, this is very big news. This is one that I think is bottomed out and can have a run. I will also be going over a penny stock that is profitable, that literally nobody knows about and has aggressive growth Q over Q. They are rapidly expanding their business and actually just had a new business line develop in the last year or two, and they are actually doing really well with it. So stay tuned for that and make sure you like the video and put notifications on and enjoy. First, we have ticker DWIS trading at 20 cents, which is actually down 16% today. But this is one that is definitely one to watch because they just had a very good Q3. So their market cap is $33 million, 250 million authorized shares, 166 million outstanding, and most of those are restricted. As you can see, 118 million of those are restricted, a very small float of 14.3 million shares. So ticker DWIS, known as Dynewise, has made a major change to its business and business model. DWIS, through its brand Pawn Trust, is now focused on micro lending. Pawn Trust is a revolutionary evolution in pawn shops, and micro lending will bring the pawn shop online, allowing anyone in the world to benefit from the efficiency and convenience of their platform. They do have their own app as well. Pawn Trust is a data intelligence platform in the pawn and micro lending vertical, with a mission to provide a trusted platform in the business of lending money to the masses, using a list of verified pawnbrokers and lenders across the U.S., providing capital to individuals to help them meet short-term financial needs while combining technology and data to transform the industry. This is actually a hot market. If you think about inflation, there are more people involved with the buying and selling of goods. One thing I did note about this company is they did not dilute a single share for a very long time, because as of December 31st, 2021, they had 132 million outstanding shares. But as of September 30th, 2022, they still had 132 million outstanding shares. But if you go to their share structure, it did go up around or a little more than 30 million shares. So that's definitely something you need to watch. But they haven't been, considering they haven't diluted that much in a year, and they will be capped out at 250 million. They could dilute more, but they have not been diluting that much. They are a profitable business. For Q3 of 2022, they did $107,000 in total income and total revenue, and their net income was 45,000. You compare that to their Q3 of 2021, they only did 61,000 and they only made $8,000 in net income. So not only did their revenue substantially increase, they also improved their margins. So that is very good to see. This is definitely one to watch. It doesn't have much volume. This is definitely one to keep an eye on because they are rapidly increasing their margins and revenue. However, they do not have much volume at all. So this is one that, there aren't really many eyes on it. But considering their market cap of 33 million, and considering they are profitable and they only have around $1 million in total liabilities, this one is undervalued. Now, I know company fundamentals do not really mean much in the market as of this year and a lot of last year, but this one, based on that, is extremely undervalued, and we'll just have to keep an eye on it and see how aggressively they can continue to grow. This next stock I have to talk about is ticker OLB on the NASDAQ at a yearly low, and they just had insiders buy over 100 or just around 115,000 shares. Not only did the CEO and other insiders of this company purchase shares, they also had a company buyback of 116,000 shares under the company's buyback program to reduce their outstanding share count by 1 million shares. They added it, and they did this because they actually have faith in the company going forward. I'm about to talk about that in a second, but as you can see, for the last month, this stock is actually up 18%, but for the last year, it is down 60%. Now, will they be able to stay? It looks like they do need to stay above $1 for at least 10 consecutive days to stay listed on the NASDAQ, so we won't have to worry about a potential uh, reverse split. But I think they might be okay for now as long as they do not drop in price. Guys, this was actually a while back. This was on December 21st. OLB Group announces insider stock purchases totaling 114,000 shares and a corporate stock buyback. So there's not only a stock purchase, there's a buyback as well of 116,000 shares. And as you can see on the 21st of December, this is kind of what sparked the movement to get this stock from around 86 cents to all the way up to $1.07, all the way down to $1.04 today. So that was some very good news for this stock. I still believe that this one can continue to go up. I think you could swing this one. Their current market cap was around 13 million the time of this article, with year-over-year revenue growth approaching 100% to a revenue projection of over 31 million for 2022. The insiders have decided to purchase shares personally when permitted, as we believe the trading price does not reflect the value of the share. So this is a diversified fintech e-commerce merchant services provider and Bitcoin mining enterprise. They announced that senior management, including the OLB's chairman and CEO, have both decided to purchase shares. All these people have decided to purchase shares because they believe the company is undervalued. They said this out of their own mouth. In addition, back on December 20th, 2022, the company has purchased 116,000 shares under the company's previously announced stock buyback program to reduce its shares outstanding by 1 million shares. As you can see, in fiscal year 2018, they did $9 million in revenue. Next year, they did $10 million. Next time, they did 9.8. So really didn't do much there. But then their last fiscal year, 2021, they did 16 million in revenue, losing about $5 million. So their profit margin wasn't there, but their revenue did increase. So they had this big jump from 2022, fiscal year 2020. They had a big jump from $10 million in revenue to $17 million. And they have a projection of over $31 million in revenue for fiscal year 2022. So that is a very big jump. And it looks like they could become profitable at some point. I don't know how long it will take. It does look like if they continue to increase their revenue, they could become profitable very easily, maybe even next year if they continue to get their revenue. Because as you can see, they did 9.8 million in revenue in 2020, and they only lost $1.8 million, and they lost $1.3 million on a year of $10.3 million in revenue. So they definitely could become profitable if they continue to increase their revenue. That's something we have to look at. So I do think this is a good play. I do think this one is very undervalued. I do think it is pretty much bottomed out and ready for a run, even though it has been up around 25% or 17% in the last week. I do think this one could continue to run. We'll just have to see how it goes, guys. But always do your own research on all these companies before you actually purchase shares. That's it for today's video. Make sure you like, comment, and put notifications on, and I will see you guys in a few days.